The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 12th magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential is something we must master each and every day. So let's begin our day with a few empowering beliefs. The first one goes like this: when I let go of what I am, I become what I might be. That from Lao Tzu out there. How about this one? This one's unknown. I'm not sure where this one comes from, but I do like it. It says, too many of us are not living our dreams because we are living in our fears. And the last one brought to us by Joshua J. Marine. Challenges are what make life interesting, and overcoming them is what makes life meaningful. Let's go check out the challenges of the markets right now. The Dow is off 31 points, trading at 15,394. S&P off 3 at 1688. Composite up 4.5 points, trading at 3664. Russell 2000 up a point and a quarter at 1049.64. Apple is up $8 right now. Google is down 5, leading the charge. The upside is Apple. Just behind them is LinkedIn, up $6 and change right now. That's up 2 6/10%. Stratasys, the 3D company, up 477. Royal Gold, RGLD, having a nice morning, up 8%. Thank you very much out there. That's up $4.30. Credit Corp, BAP, is the ticker symbol. They're up $3.50. F5 Networks up $3. X1, XONE, up $3.45. Steinway Musical up $3 here. Market Vectors, that's the GDX. That's going to be up. GLD, that's up. So Fun Holdings, SFUN, having a fun morning. They're up 7%. Universal Display, QLED, up 8%. To the downside, let's see, other than, let's see here, some alta shorts on gold. Biogen, BIIB, we took a look at, that was a bearish engulfing. We took a look at a number of weekly reversal patterns inside Biogen, BIIB. That's off $6 this morning. Google down 544. Priceline.com pulling back a bit, about 0.5%. No big deal, off 478. Tesla down $4 and change. I think I'd mentioned earlier that it was a possibility. They had a possibility to form, Tesla that is, an island reversal, but that is not the case out there. So just pulling back a bit. No reversal sign yet inside of Tesla. Lexon Pharmaceuticals off about $3.75. Charter Communication down $2.30. Rockwell Collins, COL, believe they bought somebody out over the weekend. They're trading down $2.37 right now. Let's see, Vical, that's the one that is biggie. They had a, what was the drug, what was the issue? Some melanoma cancer trial termination. That's down 58%, so that is nasty. Cisco Corp, SYY, I believe that one is the food company. That is off 5%. Haven't taken, let me make sure that is what Cisco is. Give me a minute here. SYY. I wanted to see that. That's the food distributor. I've never taken a look at that stock chart. I'm going to out there. You know, kind of a staple out there. You see their trucks all over the place. Our call number is 877-927-6648. Let's take a look at the indexes first. Let's start off with the New York Stock Exchange right now as we speak. New York Stock Exchange has got 56 net advancing issues. It is down about 13 points right now. It's got some resistance here. It's been in a bearish mode for the last 2 weeks. The summation index turning down back on the 2 weeks ago, Monday, whenever that was. That's probably right around here, July 24th out there. Now, not a lot of activity. It's really been sloshing around to the upside, to the downside, but the bears are winning the battle out here, most certainly in the New York Stock Exchange. This is going to have some significant resistance. I don't know that it'll really get up there, which is the 96.95 level. That is the May 22nd high. You can see here, summation index pointing down, oscillator below zero if you're watching us on Tiger TV. Let's go check out the S&P 500. Let's go see what this is doing. The S&P 500 right now, trading at 1689.18, key number 1687.18. Today is a test of both horizontal and that diagonal trend line coming off of the November 16th lows out there. We'll see who's going to win the battle here. Close back below 1687.18 gets the S&P 500 into the lower part of the range. Until that happens, which it really hasn't happened with any kind of conviction at all. It got above the May 22nd area on July 18th. And we've seen it intraday, on the emotional strings. We've seen it pushed back below 1687.18, only to close at or near or above the line out there, but never really below it in any kind of significant meaning from a price standpoint. And that's going to be the key to watch. So long as it stays above 1687.18, it leaves in play this 1.272 butterfly pattern. That would take the S&P 500 up to 1720.22 out there. So it's still in play. It's up against some pretty significant support. And so if it breaks that support level today, that would be a pretty big message out there. If we go take a look here at the SPYs, go see what the SPYs are doing. You'll see, in essence, a similar pattern. The 22nd high for May is 169.07. You're trading at 169.04 right now. But again, no real significant closes below May 22nd out there. If it can close above 169.07, it keeps in play the 1.272 butterfly, which would be 172 and a quarter out there, and that is on the SPY. Let's go take a look here at the see what pops up next. How about the diamonds? The diamonds, on the other hand, that is where Mr. and Mrs. Weakness are hanging out. Now, inside the diamonds here right now, what they also are doing, kind of a narrow-banded trading range. They're back inside the lower part of the trading range. That is below May 22nd. That's below 155.14. What was tested on Friday was the July 11th gap up. That was 5.8 million shares. And on Friday's pullback, it was a pullback on 4.5 million shares. So it's a test of a support level. Let's see here. Was there a test of that? I believe that might have been the second test. The first test was on July 26th. It was 3.8 million shares, which got down to 153.67, and that gap up below was 153.71. So today is going to be the third test of that support area, and that's going to be important for us to be paying attention to, because a third test of a gap, this is where gaps can really, really be your friend. Three tests marks a significant support level. Now, until the Dow gets above 155.14, all it's doing is trading in a trading range from the low of about 153.70 or so, where we're at right now, to the 155.14 range, the May 22nd area out there. So that's what's going on inside the diamonds, and the number you want to be keying in on today is 153.71. Look, this can trade all the way down to, and it has not yet, the top of the gap. That's a July 10th number, and that's 153.29. Still close above that and hold that and do it on lighter than 6 million shares, and you still have a support level out there, and then it would just be closing the gap. But right now, the gap is in play. Price is above that area, 153.94. Let's stay here inside the ETFs, and we can go over and take a look at the actual indexes. Let's go see what the Qs here are doing. The Qs here, having completed or very close to completing the 1-to-1 A to B equals CD up. That was coming in off of the low here from April 18th. That's your A point. Your B point is May 22nd. 74.95 is the number. 59 million shares the Qs have not gotten back down there. Your C point on this was the June 24th level, volume of 41 million shares down there. This made a high with 15 million shares. I said a low, which was June 24th with 41 million shares, and the high being made with 15 million shares. All the volume up here, even as it was pushing the highs back on August the 8th, as it was pushing higher, that was still on 19 million shares. So the volume is to the downside out here. Certainly the Qs ought to come back and at least test the June 20th high, and that's at $72.16, or 60 million shares there. What the Qs have not done all but one time is test their gap up from July 11th out here, which is at 74 and a quarter. So the Qs here, just they're not giving it up. Apple, with it being the largest weighting inside there, that obviously is helping out the cause, and Apple's up $8 and change. We'll take a look at that in a little bit. Let's take a look here and finish this off with the Russell 2000, the IWM. IWM right now at 104.36. The IWM on the weekly charts, we've taken a look at that. They've given us significant reversal patterns. But, we've seen the backs off here inside the IWM have not been with any kind of significant volume. You had 8 on August the 7th, it pushed lower with 23 million shares. Then it pushed a little higher on the following day with 27 million shares. And then a little bit lower on Friday with 27 million shares. So not conviction really to the downside inside the IWM, but it does have resistance in the 105-ish type range out there. Let's go take a look at some of the other indexes here. We'll switch over. Let's go take a look at the SOX, see what is going on inside the SOX out here. And then we'll take a look at the VIX, see what it is doing. We take a look here at the SOX. This thing has traded down into the swing point here. So we've seen the SOX here test the July 29th area. We saw a test of this hammer candle, which had formed on July 26th. A small hammer, albeit, but there was a close below and then moved right above that area. The hammer candle being tested again here this morning. So for some reason, the SOX does have for some reason, it just simply has support down here at that July 29th level around 469.13. It's trading at 473. Right now, if we take a look at A to B equals CD down patterns, it would just be a relatively small one here. That would take the SOX down to 462.69. It's going to have to bust through the July 29th swing point in order for that pattern to come into play out there. Let's go take a look at the VIX index. Let's go see what the volatility index is doing out here. Oh, I didn't need that out there. That was from something else over the weekend here. Here's the VIX. As we take a look at the VIX, this is what we really want to pay attention to, because notice that 50-day exponential moving average. Notice how it's moving down here. The actual number on the 50-day is 1407. The VIX is trading at 1309. The price is getting very close to that 50-day exponential moving average. I don't care if it's moving down to meet price. Once price gets above that level, folks, that is where the real carnage in the market has taken place over time. And I can go back to as far back as we need to and show that to you. So that is really the key out here. People can talk about the VIX being down at lows and all those types of things, but when you start taking a look at what happens when the VIX gets above that 50-day moving average, you start to see some real carnage. You know, the last time was down here on May 22nd. It was on May 22nd when the VIX closed above that a 50-day exponential moving average, continued moving higher, and we saw the markets make a low as the VIX was making its spike high back on June 24th out there and started moving back and moving lower out there. You can take a look at the same thing back here on the time period of April the 15th, albeit just for a few days out there. You know, that's where you start to see your significant declines in the marketplace. So that's really what we want to be paying attention to right now, because we are so close, or the VIX is so close to that 50-day exponential moving average. Again, that number, which will change, that's 1408 as we speak here this morning. 877-927-6648. Give us a call, folks. We can go take a look at your stock chart. Right now, we've got Goldilocks trading up $27, silver up 87 cents. We'll be right back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 25. S&P is down 3. Let's go check in on some of the core stocks out here, see how they're performing. ExxonMobil here is struggling. Of course, ExxonMobil had broken out of a one-year $7 trading range, broke out, was a false break, broke down into with a gap down and with some volume. Did that on August 1st. Right now it's on its way to $89.62. It's at $90.07 out there. That would make a 0.786 retracement. But $89.62, hey, might as well go tag the June 24th area. That's got 17 million shares. So June 24th is important, and with ExxonMobil being such a large component of the S&P 500 as well as the energy sector, pulling back here with 9 million shares. So it's pulling back with light volume, 9 million shares being Friday's candle out here, and that's coming into June 24th. The top of that June 24th bar is 89.50. So far, volume today in an hour's worth of trading is about 2 million shares. So volume pretty decent as it comes into 17 million, but not enough to bust it down. It's trading in towards it. It has not gotten down to the top of that candle here just yet. But when you come back into a trading range, what ultimately is likely to occur inside of ExxonMobil is a move all the way back down to the bottom of the trading range, which is about $85, and that may set up the nice next buy. Of course, if ExxonMobil busts down through $85, then it's got 7 points to the downside out there. That would bring into play about $82, and right around $82 or so, you've got a high volume bar, 82 million shares, matching $82. How about that? and that is on the day of June 22nd out there. So we're going to want to pay attention to ExxonMobil. So ExxonMobil trading lower is good for the, so if you're short the energy sector, that's a good thing. That's what you want to see. I don't know how the other equities are doing here at the moment. If we take a look at IBM coming back and testing a high volume low out here. That's April 22nd. The day before was higher volume. Nonetheless, the swing point is April 22nd. 9.8 million shares, and the tests have been on lighter volume, 4.5 and 3.2 million shares on Friday. 4.5 was Thursday. Today you're getting a little bullish reversal signal. You're getting a bullish engulfing candle out here. Nonetheless, IBM's got significant resistance. It's got a couple of gaps over the course of the last 6-7 trading sessions out here, so I wouldn't get too overly enthused about IBM. IBM has a better trade setup as it moves down to about the 182 level, and I'm not even certain that 182 is going to hold. If it does, I can tell you I've been waiting for IBM to get back there for quite some time. So we'll see what happens as it gets back there. But it has formed a bullish engulfing. It is rejecting a swing point low. It has done it for 2 sessions in a row on light volume. That is a positive out there. And today's volume so far inside IBM, 517,000 shares. Again, that's going against 9.8 million. So no way is that enough volume to bust through there with volume. That is through the its most recent swing point. Let's take a look at Apple out here. Apple was trading up about $8 a few minutes ago. Let me see, what's it actually up here? $8.77 right now. And Apple, not a bad-looking stock chart here. Looks like it still wants to move higher. It's run into a resistance of the 200-period exponential moving average. It's unusual, highly unusual, for a stock to only do a 1-to-1 A to B equals CD when it had such a shallow retracement and a gap through the B point with volume out there. So that says that when if Apple can get above the 200-period exponential moving average, that's 468.02. 477, 493 is not out of the cards for Apple. So in fact, I would expect Apple to get really all the way back to where it broke down, which is $510, and that's going to be the trading session of January 23rd out there, 504.77. So it'll be interesting to see how that plays out with this pattern versus the market, versus the Qs, and so forth. Of course, we took a look at the Qs. The NDX is going to show the same thing that the Qs did, which is not a lot of weakness out there inside the market. Of course, the Qs are not just made up of Apple. That just happens to be one of the 100 out there. Let's see what else we have inside here. Google's another one. So let's go take a look at Google. It's trading off a bit this morning. Google is down about $6. So not a big deal. What happened to Google? There we go. I pulled the wrong chart, I guess. So as we take a look at Google, it's trading into this high volume bar here, trying to test the area of 875.61. Got a bit lower to go. That's right now at 883.74. Volume down there, that was after the earnings release. That was with 7.3 million shares. The pullback, much lighter volume, 621,000 shares today, so it doesn't have enough to bust through it. But the real support here inside Google is the top of that hammer candle from June 6th out there. And that level is 866.33. That's been tested 1, 2, 3, 4 times and has held. So Google should have some pretty decent support at 866.33. 877-927-6648. That's our call-in number. Give us a call, folks. Be right back.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow off about 20 right now. S&P down 2.5, and a little divergence here going on inside the market. I've got the Euro-Japanese yen chart up on my screen. It's a 30-minute chart out here. We can see that this has been trading lower ever since the highs at about 4 o'clock in the morning. Remember, our market here made a low, made a nice little butterfly pattern. I'll go switch over to that on the 30-minute chart at 5:30 this morning. You've got price here in the Euro-Japanese yen moving lower. That's a really great directional indicator for which way our markets should be headed. Our markets are bouncing up higher. You want to see confirmation with the currency pair traveling along with it. That is not what we are seeing out here right now. If we take a look at that 30-minute futures contract here, that's taking a look at the S&P. You can see the 1.272 butterfly buy pattern that completed at 5 o'clock, this 5:30 this morning. As we're coming into the trading session, you can also see it was in the extreme sold condition out there. So we've seen a nice little bounce out of this. It's running into a bit of some resistance area that was set up here. We saw a little shooting star candle during the last 30-minute session at the 10:30 session out here. That's going to be tested right now. Real resistance on this is going to be in that 1688 to 1690 level. This little descending trend line coming off of the high out here from 6 o'clock in the morning on August the 6th. So we'll see if that trend line holds. That's where I am looking to put on a short position in trading the ES Mini. I was long this morning. playing the butterfly buy pattern. I went ahead and took my profits off the table as it came back to the most recent swing point here at 2:30. At least I went ahead and set up the trade ahead of time. Just simply while I'm on the show, it's kind of hard to multitask. And it's always nice to have both sides of the trade. I got a number of emails out from folks over the weekend on Friday or what have you, and because we had somebody that was going away on vacation, and she was asking about her stops. Or her stop, I should say, and that was in the GDX, so she's good there. So she's having a nice vacation. You got gold's up $29 right now. GDX is up nicely, as well as most of the mining stocks out there. And I asked her if she also had an exit in place. Did she have an exit in mind? It's always great to have both sides of the trade. I trade always with both sides of the trade. You bracket both sides, and then you let the market do what it's going to do. Doesn't mean you can't come back and adjust things or what have you. But at the time that you are least emotional about a trade, when you are most objective, is before you've entered the trade. And so you should know ahead of time, where your support is going to be if you're going long, where your resistance is going to be if you're going long as well. And then that, because this is really a game about making money. It's not about being able to buy the bottom tick or sell the top tick out there, at least in my opinion. That's not what it's about. It's about getting that big, gold, juicy hamburger, medium rare if you like hamburgers. Preferably, I like fish or crab or something like that. In any event here, so right now the ES Mini, so I'm just sitting right here on the sidelines. I haven't taken my early morning, Monday morning profits. That's always good. And now just waiting for a place to come short. And really watching the candles to give me an indication of when that might take place. May not be till 1688, might be 1690, might not be till 1692, but it is going to take place. The change in trend here clearly in the marketplace. We have the we've got I say clearly in place. I will wait for the market to tell me, even though I believe I can identify spots where price is going to go. The market will tell us. It'll give us at least a signal, and that'll make it easier to bracket the next trade, where you're going to go ahead and put your stop if price goes above, if you're going short, and where it is that you're going to exit on the pattern out here. So what we're seeing take place in the market right now is nothing more than normal when you take a look at these different trading patterns out here. And the cool thing about this pattern that's set up here coming into 5:30 in the morning, that was a leading indicator pattern that was out there. This was one that was able to have been drawn well in advance because the market had already done 75% of the work for us. We had the 11 a.m. swing point on August the 7th at 1680.50. We knew that was the swing point low, and then you had the swing point high at 10 o'clock in the morning on August the 8th. So just simply being able to use your Fibonacci ruler to draw your expansions and your contractions, if you will. 1676 was the exact number of the 1.272 expansion out there, and then just simply tie it into what's going on from the oversold condition. Has a market on a 30-minute chart as it's been falling down, we can go back into the 2008 time frame, 2007 time frame, and that's the beauty of utilizing this relative strength, relative weakness indicator. When things get either too overbought or too oversold out there, the market's going to move sideways or retrace. Retrace in whichever direction it needs to retrace in. Oversold, it's going to retrace up. Overbought, it's going to retrace back and move sideways. And so much information gets communicated to us. Let's go take a look at the commodity sector here and see what we have going on. Let's start off by taking a look at the currencies first. We'll take a look at the King. We've got the U.S. dollar index trading down at about 81.46 out here. Looks like it has put in the low after coming back and testing the swing point low from June 13th out there. The top of that was 80.98. That was tested on Thursday last week, I believe it was, as it got down to 80.89 out there. We're seeing a rejection of that area. If we go take a look at the currency pairs, let's go take a look at the longer-term charts here. Let's actually put up the daily charts for the euro. The euro-U.S. dollar currency pair, it has made a 100% move, just like the U.S. dollar index did. I'm looking for the euro here to give me a signal if it closes below the low of June 19th out there, 132.60, and then probably I'll sell the first retracement of the euro on an intraday chart out there. But until that takes place, it's just traveling with inside that candle session out there, even though I got a nice little dark cloud cover out here a couple of trading sessions ago. If we go take a look at the U.S. dollar Japanese yen currency pair, that had formed a .786 Gartley buy pattern here The exact number that it would have formed that at would have been at about 94. Well, let me give you the 0.7, 95.43. Actually got down to a low of 95.79 out there. Now, what we haven't seen is we have not seen the bullish reversal signal, so I wouldn't take a long trade here just yet. I would take a you got to get at least a close over the body from Friday, and that is 96.686. So 96.69 would be the number that you could go ahead and step into that from the long side out there, and that is on the U.S. dollar Japanese yen currency pair. Let's go take a look at the Australian dollar. Daryl and I did the Nadex Bull Bear binary option hour. I suggested this would be a nice trade set up here. If you were going to trade the currencies with the Nadex platform, this would create a nice little Gartley buy pattern. We've had some. Now, what this is also doing at this stage is it's running into the natural resistance area. Just like on the ES-mini on that 30-minute chart that we were looking at, natural resistance is going to be where the previous swing points were at. In this case here, that's the July 29th area. Once it can get above that, you'll see a nice little bounce to about 95 and a quarter, 0.9524 out there on the Australian U.S. dollar. More likely, this will go ahead and move up into the 200 period exponential moving average, very close to the 0.618 retracement. Let's go take a look at the pound, see what the Great British Pound here is doing. This is forming an A to B equals CD up. This still wants higher price out here. Would like to get all the way back into the swing point from June 17th out about the 1.5723 level out here. So it has backed off just a bit, but nothing really of significance yet. That is in the Great British Pound U.S. dollar currency pair out there. We've got the Euro Japanese yen. We took a look at that on the shorter term time frame. It too is setting up a Gartley buy pattern. That was the exact 0.618 is 127.92. It got down to a low so far of 127.95. You got to like that. However, no bullish candle here. This is not a long trade in my opinion because the 0.786 retracement area could more likely be where this would be headed to, which is about 126.61. So no bullish candle out here. Although you've got the pattern that has set up, you do not have the signal out there. Goldilocks, you've got gold trading up nicely here this morning. That is up $27.50. Volume so far behind the move looks like 104,000 contracts coming into 159,000 contracts. So that's looking pretty good. The swing point on this is the July 24th level. What gold is doing, it is now above the April 16th. That's a high volume low out there that was busted through. That's April 16th, 1321.50. There were 700,000 contracts during that session. It continued close above 1321.50, and that's a very bullish sign for gold. Of course, gold has given a number of bullish signs out here, and that's the beauty of it. And one, it broke that descending price channel that had been traveling in for quite some time. In fact, going back to September of 2012. So I'd say, a good bit of time out there. Now you are taking on a swing point here and taking that on with some decent volume. We'll see how this actually transpires today. What I do know is that the non-reportable group, that's the individual type traders out there, they are still in their largest net short position out here. The short covering rally has not yet been seen. But gold looks like it wants to run. I'm thinking the 14, certainly the 200-period exponential moving average is going to be the next real key area to give us information, assuming that we continue to see the ascent here. And that's at a price point of about 1470. But the way this pattern is setting up, 1544 is more likely the target range inside Goldilocks. Silver here has really moved off of the bottom. It is up above its swing point. It's July 22nd swing point. That had 22,000 contracts out here. Today it's already done 47. So you got conviction behind the move in silver out here. Boy, its 200-period exponential moving average, just to give you an idea, is all the way up here at about the $25 range. The number is 25.13. So that it would be a heck of a move inside the silver. But, boy, it has been explosive off of the C point, the 618 retracement from August 7th. And you can see this move here, very strong. The silver did absolutely, nothing but moving sideways. Still formed an A to B equals C. The C point on this was the low of August the 7th, but off of that C point, it's been a trampoline. And going to complete here the 1-to-1 A to B equals CD at 2150, but that's not where it's going to stop. I don't even think it'll slow down as it gets to that level. Just simply a wave right on past there. Light sweet crude here moved up a bit on Friday. Just does not want to back off. It's only done a 0.382 retracement of its last leg low from June 24th up to the high out here on July 19th. I don't see a trade here necessarily, but if it moves up into that July 19th area and takes that out, and that is 109.32 when I say takes it out, that sets up the move to at least the $114 area, 113, 114. Bonds here, bonds still continue to move sideways until they break above 136 even Steven or below. I would say the low of 132.04. Just a lot of sideways, herky-jerky action out there. Natural gas gave away a trade here on Friday inside natural gas because of the patterns that it had set up here. And, yes, I am long that trade along with my clients and about 9 other positions that we have. And one is short, I think. I think it's just one short, and the rest are long positions in the marketplace out there. But natural gas gave away that trade. If you didn't hear the show, go listen to the 9 o'clock show. That's archived on Channel 9 from Friday. I review all of the different patterns that are out there and the reasons to have taken that trade. No guarantee that it worked out, but went through, actually did the position sizing, which is something that is key to trading out there. So if position sizing is something that's new to you, please go back and listen to the archive of that show. Let's go take a look at the sectors within inside the S&P 500. We know the number one weighted sector is technology, so let's start off with the XLK. It's at 3214 here right now. On Friday, it pulled back with 3.6 million shares. No real significant volume. Real support here to test inside the XLK, and it's not anywhere near there, is going to be the range of about $31.37-ish type cents. That is where we saw a breakaway, a little breakout, not with volume or anything, but 10 million shares to the upside on July 7th. We saw the XLK pull back into that area. Again, on July 10th, you had 8.8 million shares. The day after on the breakout was 10 million shares. And the pullbacks here, first one was with volume, 13 million shares. So it suggested it wanted to be back and come down there, and it did. But that was on July 23rd with only 4.5 million shares. So looks like right now it's pushing into the swing point here. Let's take a look at the volume. August 5th, only 4.3 million shares, and it's pushing into there with 1.1 this morning. So it's got the volume to go back and test the highs. Inside the XLK, that would be $32.31. That's the May 20th high out there. So the S&P is not going to roll until the XLK rolls out there with it. The XLE, it's the energy sector. That's like 5 or 6 down below. So it's not in the upper portion of the weighting out here, but just take a look at it since it's on my screen. 82.13, really been trading sideways here since about July 17th out there. And the XLE is actually holding up pretty well considering what we took a look at in ExxonMobil earlier. So the XLE, the XLV, the healthcare sector, that is the third weighting structure inside the S&P 500. It's pulling back a bit this morning, but volume so far, only 1.2 million shares. This thing had a decent candle session with 6.5 million shares that is trading into and towards on July 19th out there, so not enough to bust this one down either. 877-927-6648. Dow's slightly green here, up 5. S&P down a point. Be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's do it. Let's recap the market, where we're at, what you should be looking for as we come into the close today. We're going to start off with the New York Stock Exchange right now. It's trading out at 96.09. The key here is taking a look at the net advancing issues out here. The bulls would take charge if there were 1,903 net advancing issues today. Now, that would be by the hair on their chinny chin chin, but nonetheless, the oscillator would turn positive out there if, in fact, that happens. Anything short of that, the bears still have control of the market, and what you should be looking for are selling opportunities, selling the rallies out here. So that's on the New York Stock Exchange. If we take a look at what's going on with trading as we speak at 10:54 in the morning on Monday, we'll go take a look at the 120-minute chart here of the ES Mini. We're going to see a nice 23-point consolidation range that price has been traveling in here for quite some time. Price right now is at 1686. It's up above the 200-period exponential moving average. That should have acted as resistance. It still may act as resistance. This chart here does not complete until 11:30. That's another 35 minutes in the trading session, so I won't know. If, in fact, you get a close above the level of the 200 period, which is 1685, that sets up potentially even a move in the best trade setup here for taking a short is the ES Mini getting all the way back up to the top of this consolidation zone, which is at about the 1695 range. That area has really acted as a strong support really a strong resistance line, more so than support, but it was tested as support once during this move out here. So that would be the ideal and the ultimate trade setup inside the 120-minute chart out there. Of course, you're going to want to watch and see what the relative strength indicator is doing at that stage. Don't know that it'll get up there, but that is a spot where if you got that kind of a gift, that's where your back is up against the wall. That would be a nice trade to take a short position inside the markets. On the 30-minute chart, it's not necessarily showing that 1695 level. It is showing you this trend line out here, this downtrend line, and that's probably right around the 1690-ish type range, 1690 to 1692 out there inside the market. But it looks like this will get into a overbought condition probably as it gets there or prior to getting there. But that's a trend line that you want to be paying attention to on your 30-minute chart out there. What else as we come into the close should you be looking for? Well, in the case of the S&P 500, that number is going to be a close below 1687.18. If you get that today, you'll be back inside the lower part of the trading range. That brings back into play June 24th. It'll also, if that occurs, will be below the trend line coming off of the November 16th level. So that'll be your diagonal support, which will not have held. How about that, man? I got that grammar all butchered. But you know what I'm talking about. 1687.18, you get it closed below there, and you will have, or the S&P will have closed below two support levels. Now those would act as resistance. You'll also want to pay attention to what is going on with Basil Chapman, who is up next, his little VIXie out there. And the reason why you want to pay attention to the VIX index is because that is getting awfully close to that 50-day exponential moving average. Looks like it's coming down to form a little relationship, not the kind of relationship that you want to see out here, and that's the relationship where the VIX gets above the 50-day exponential moving average, because all the real damage that gets done into the market is when the VIX gets above that area. What is that number? I'm glad you asked. Right now today, it's 1407. What was it on Friday? It was 1412 out there. So tomorrow, it'll be an even lower number out here. And you got the VIX trading at 1294, so it would need a significant down thrust today in order for that to happen. But, folks, if that does happen, we know that the bears have had control of the market for the last 2 weeks. You get a close about 1407 today in the VIX. Please tighten your stops. At least make sure that you've got them in play. Stay tuned, folks. Basil Chapman is up next. Following Basil, we got our man Larry Pesavento. After Larry, it's Daryl Martin. It's David White. And then that Tom O'Brien show. He's back in the saddle again. Thank goodness for that. He'll be with you from 4 to 6. Have a great trading day. I look forward to seeing you tomorrow morning. Take care, folks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.